please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The Asian markets taking a weak handover coming in from the Wall Street. The Asian markets are also lower in early morning trade. The Japanese markets, they're down about 1.5%.
Tata Steel is, as of now, the highest bidder with an offer of 17,000 crore upfront cash payment and 7,500 crore equity infusion into Bhushan Power.
Feb 6 low of 10,276 is now a sacrosanct number to watch on the Nifty.
Somewhere in the single-digit corrections from here is what I would, in the big caps, is what I would see as getting the markets to a fundamentally more healthy level.
Starting 0.5% lower, almost 45 points down, 10,340.
We are seeing consumption-related boom occurring, especially in rural-related themes.
Rajiv Bansal is fighting in arbitration to get close to 12 crores that is due from Infosys.
I don't believe what we've done is anti-competitive in any way and different from what many other exchanges do.
Redundancies, can be cut down, and that will have a lot of saving potential.
Semcorp's India unit, as well as Sumant Sinha founded Renew Power, which is owned by Goldman Sachs. They both are working really hard for a quick IPO in this particular calendar year.
Basically made a low of about 10,340, and from there the market has recovered about 30 odd points or so.
Yeah, but as happens sometimes on expiry day, maybe there's been second round of selling. It's been very volatile, though the lows are being respected, but at highs there's selling as well. This is closing bell. I'm Anuj with me, Surabhi. Hi Surabhi, good afternoon.
Good afternoon, Anuj. And yeah, it's not really gone as per the bulls' plans. I mean, if they were hoping, volatility sinking in, and as you were saying, 2018 lows for the Nifty Bank as well. We've made those lows today. What's the screen right now telling you? And we've just started the last hour, so more volatility.
Yeah, I mean, I think the last 10 or 15 minutes, it's just been really gut wrenching for the bulls in the sense that it looked like things were stable, the lows were being respected. Far from it, and even right now as well, I think we are still at the morning lows. So it will be interesting to see if those are taken out or not. But it's expiry day, so on expiry day in last 30 minutes, anything can happen. There's a lot of VWAP adjusted, adjustment that also happens. But Surabhi, the point here is that while this market will see short covering bounces and short covering rallies, at higher levels there is going to be selling as well. Yeah. And stability for this market, I think, is going to take some time. We may have seen the worst of the price damage. We might now go through a bit of a time consolidation, time correction. That may also happen. And within that, you will see these kind of phases, maybe where the market will rally from the lows. We'll see selling from the highs. But today's action is telling you that maybe you need to test that bottom again to see if that's holding or not, that recent low.
Oh, absolutely, and there's plenty of pressure, by the way, from the global markets today. It's not been the best of days in terms of foreign cues. A couple of the European markets are down in excess of 1% as well, so that's sort of something.
Position yourself in this last hour of trade. Ashwini Gujral and Mitesh Thakkar now join us with closing strategies. Good afternoon. Ashwini, quite a bit of a turn of events for the market. It's been a tale of two halves. The first half you saw quite a bit of recovery, but that's getting sold into now. Your thoughts on how to approach trade from here?
In the last 5 minutes, that has been bought into also. So, basically you are doing ranging, and that ranging has to happen because you've fallen from, 12 floors. So it's, market, you can say, safely has become range bound. So you rallied 30 points, you gave back 30 points. You're back at the open. I don't think much changes here, but it's difficult to take short positions here because the pullback that is possible from current levels will be tough for people to tolerate if you are short here, because a 500-point pullback on Bank Nifty, 150, 200 on the Nifty is possible. It all depends on how US reacts today to its, whatever Fed minutes, because the other markets are just following what US did. So if that turns, then, you could get into some sort of a pullback. If not, then, I think this 10, 275, 300 to about 10, 420, 450, that will sustain for a bit before the next leg down happens. Having said that, there could be some short covering still to happen as we go into the close. So RIL is a buy with a stop of 920, target of 956. Escorts is a buy with a stop of 868, target of 900. And Hindalco is a buy with a stop of 235, target of 251. What we are doing, however, is that we are continuing to hold on to multi-day long positions because the market really isn't breaking down lows, and at some point because of some event, etc., chances of a pullback are fairly strong because it's strongly biased on the downside.
Sure. Ashwini, just a follow-up question on that. I mean, expiry also makes it a little murky. So I'm not sure if this is support that we are getting because shorts would be covering today. Or do you think that, you are seeing some sort of sustenance and some sort of intrinsic strength, which is why you're taking the positional long call for the next 1 or 2 days?
See, the issue is very simple that you have fallen consecutively for many days, particularly on the banks. The banks have been beaten up black and blue, both by FIIs and by locals. By FIIs on HDFC Bank, ICICI Bank, by locals on PSU. Now, even if they are going to go down further, I think you need some sort of a bounce which people can again sell into. So that way, this is like a market which is in a corner, and the only way it can come back is on the upside. Now you will have these temporary falls and they will shake out weak longs, etc., but they will shake out weak shorts also. So this is the time to cover shorts, maybe take long positions and then just hold on to them, waiting for the trigger where all markets bounce back. Maybe there's some announcement from the government or US turns around, etc. Something unexpected happens and these shorts are made to cover.
Fair point. Mitesh is also with us. Mitesh, good afternoon. Your thoughts on trade and your stock calls?
Yeah, so I think, we've been holding around or hanging around the support zone, especially the bank nifty is still closer to about 24,800, and we haven't had a decisive bounce back, so the way I'll approach is to keep a close watch on the bank nifty with the expiry movement. If we don't break down, then there's a good chance that we'll see a stronger throwback than what we've seen in the last few days. And if that happens, then I think, the nifty will also get pulled up. So for the timing, it's still a market which I'm waiting for to get a proper signal into. But on stock specific basis, I have 2 pharma stocks to be traded on the long side. I think Ipca is broken out of that 630, 650 zone, which is a very important supply area. So now having seen that breakout, that's a buy with a stop below 640, look for targets close to about 730. While Aurobindo Pharma, the intraday charts are trying to give some kind of a reversal. So buy this one, keeping a stop at 582 and look for targets close to about 615, 620 to begin with.
Yeah, big move on Aurobindo Pharma. The company was presenting at IIFL's conference today. Talking of that, Rahul Ajmera is with us, CEO of IIFL Institutional Equities, from the sidelines of that conference, which is happening, the IIFL Enterprising India Conference. Rahul, hi, good afternoon. So what's been the feedback of first couple of days of conference? As we've been discussing with Nirmal, you have record number of companies and investors participating in this conference. What's been the feedback for the first couple of days?
Well, first of all, thank you for having me here. I'm really happy to come by, especially in the context of our conference. And as you said, we've really had record participation from corporate India, as well as from our wide footprint of global client base. So it's very serious participation from the FIIs. So in terms of the overall feedback that we've gathered so far, on the investor side, it remains to be long-term bullish, but short-term it's of cautious optimism, which means over the next 3 to 12 months, people are gonna figure out, while being cautious, what are their top ideas that they could include in their portfolio and potentially get out of names that they find risks in. So that's really, from the investor viewpoint, is remain consistent with their thought process coming into our conference as well. And from the corporates themselves, it's been pretty positive looking at across segments. If you look at commentary coming from L&T, for example, commentary coming from the banks, some cement companies, there is obviously a dearth of a large-scale private capex, but definitely there are green shoots here and there that are positive But in summary, there is nothing in the near term that convinces us that there's going to be a breakout rally of any kind. People have to be cautious amid developments globally in terms of central bank action and commentary, as well as locally, where valuations have been rich and politics is also gradually coming in the fore for people to focus on.
Okay, I guess, yeah, caution all around. Rahul, good afternoon. What did the buy-side folks have to say about, all this news flow on banks? I mean, there's been a lot of news flow to digest. The fraud is one thing, then the RBI's new sort of regime for tackling NPAs and the new kind of provisioning requirements that will usher in. What's the view you picked up on both PSU as well as private banks?
Well, on the fraud itself, definitely there's a dent that got created in terms of the credibility that one had for the banking system. Having said that, especially the FIIs are taking it more like a noise at this point in time, and it's definitely a one-off kind of an event in their mind. So I'm not expecting, based on my conversations, for them to write off either a bank or a segment of Indian banking. So when you talk about PSUs versus private, their thought process has been pretty consistent with or without the fraud, is what I would say. And in terms of RBI as well as government's action on the asset quality, as well as ensuring up the bank, especially the PSU bank's capital, they're taking it like a positive, because it strengthens the overall system. It helps banks to have better asset quality on a longer term basis. So that's where they are, and they obviously always slice and dice the market and figure out their best spots. So there are going to be guys who are focused on value, who are showing interest within the PSU side of the banking, and there are guys who are focused on growth, where they continue to be very focused on the private segment of banking. So that's where they are in my assessment.
Rahul, what exactly did the management of Aurobindo Pharma say? Because the market latched on to that. Whatever they did present, it's a big surge in the stock.
I'm really sorry, Anuj. I was not in that meeting. So I really don't have
but your house view on large cap pharma
have had to share with you.
Yeah, your view on large cap pharma.
We are very cautious on large cap pharma at this point, because of the pricing pressures that are there within the US, as well as the number of generics players that are there in different molecules. So our view is we are here at a point where we like to let these things either pass, or for companies to move up the value chain and get into even more complex limited competition products. We are actually pretty positive with the biosimilar space. And if you ask me about the sector as a whole, we are more positive on the biosimilar opportunity than the rest of the pharma at this point in time.
Since we're talking pharma, the other sector that typically is spoken of in the same breath, IT. Rahul, that's something that everybody seems to be really loving in the market right now. Your own view, can we still see further upside despite the rally?
Yes, we can see further upside despite the rally. And again, when we look at the mid-cap IT, there is upside potential largely driven by the phenomenal earnings growth as well as revenue growth that they've been able to generate. And it's very credible. Some of the names that have been delivering record quarter-on-quarter growth, and even this quarter, which is seasonally one of the weaker quarters for the year, some of our top recommendations actually delivered very strong earnings growth as well as revenue growth. So we do expect further upside in those names. We still have an opportunity within one of the larger names, Infosys, which is actually one of our top ideas. There's a valuation discount that we think will narrow. So we feel that the fundamentals alone justify for more upside in these names.
Okay.
And if we include the fact that people are getting more defensive and they are moving towards IT, that's the other driver that convinces me that they are set for a little more upside here.
Okay, it was good talking to you, Rahul. Thanks a lot for your time today, and have a good conference. SP Tulsian of sptulsian.com and Prakash Diwan also with us. Good afternoon. Mr. Tulsian, your thoughts first on Aurobindo Pharma, because obviously that Unit 4 inspection is something that the market is betting on, but stock up 4% right now as we speak. It's getting out of index though, so how to approach this stock?
See, sometimes when the stock is going out of index, it works other way also. So I won't be taking that call here at this stage, because still you have 1 month, that is full March series, available with you. So there has to be some fundamental news which we may not be having knowledge of. But we have been keeping amongst the, though we have been, keeping neutral view on the pharma sectors per se, but Aurobindo Pharma definitely falls in the buying recommendation, and we in fact find huge value existing for the stock going forward. Even if you take the EPS of closure to about 50 rupees or 45 to 50 rupees for FY19, it all depends, need to hear the commentary of the management, but that can be taken as, so, taking that also into account. On the pure valuation basis, the stock looks quite good, but the reason for this sudden upsurge in this last maybe couple of hours or so is really not.
Okay, by the way, speaking of stocks on the move, let's pull up Fortis Healthcare. Lots of selling coming in, pretty much the lows of the day on that stock. It is down 5.5% as we speak. We also have Prakash Diwan with us on the show this afternoon. Afternoon, Prakash. So let me start off with Fortis Healthcare. I mean, it's a very news-driven sort of counter at the moment. What would you advise on it?
So I know this sounds like an opportunity that seems to be very clearly now in the making, because a lot of those roadblocks that existed earlier have gone away. But my sense is that the kind of attendant volatility that you will have in this trade, and it's become like an overcrowded consensus trade of sorts ever since some marquee investors also bought into it. I would recommend that lay investors stay out of it. This is okay for professional investors who've done their math in terms of calculated the risk and look at a risk reward which is significant. But not taking away the fact that it's a great asset, one of the lowest valuations in the peer group. But you would have to live through these yo-yo moves, because of the news flow and attendant volatility. So it's not a great idea right now, because you have much more attractive valuations available on so many other counters, so many other sectors, that there are better themes to play than just ride on this.
Okay, we'll take a break on that note. Before we do that, I just want to point out a couple of stocks. It's F&O expiry, so perhaps moving ahead of that, just see the intraday chart of PTC. That stock right now has moved to high point. 99 something on that stock, if you would have that stock intraday for you. And Apollo Hospitals is the other one which has moved to high point. So both Apollo and PTC moving to high point right now. Shrey Infra as well, maybe you want to add to that list, that stock as well, up quite a bit right now. Before we take a break, Mr. Tulsian, thoughts on any of these names? I know you've liked PTC in the past, but a couple of other names which have moved to the high point right now?
See, maybe we'll keep a view for the time being on PTC, because the kind of corrections which we have been seeing in mid and small cap, it is better to wait for some more time, though we have been having a positive view on the March series, because I don't think that the weakness is likely to continue, and in fact we will be seeing the buying coming in with much more stronger way in the month of March, which will see the front lines as well as the mid cap also seen moving up. So maybe at this stage we will keep a focus only on PTC India at this stage.
Range bound so far. It's 2:50 p.m. Good time to get some more trading ideas going. Sandeep Wagle is joining in. Good afternoon, Sandeep. What's on your list?
Afternoon, Surbhi. I would go with a sell in a power grid, stop loss of 193, target of 186, and a buy in a Mindtree, stop loss 730, target 756.
Okay, Sandeep, thanks a lot for those trading ideas. IDBI Bank is really having a phenomenal series and is ending on a really strong note. Just pull out the intraday chart once again of IDBI Bank, up about 4.5% right now. Mr. Tulsian, clearly the market is betting on something here. Your thoughts, because this has outperformed the PSU Bank Index at a time like this, and that too by so much margin.
So difficult to give any reason, but again the street is talking of the statement that which we have seen about maybe a year back also, that Singapore government fund and all that are seen quite interested. But I won't give any weight, to these kind of things coming in, because when the better banks are available, maybe in terms of asset quality, maybe in terms of the performance, and considering that, I'm not too worried for the PNB for the PNB effect, which is seen giving a negative effect on all the PSU banks, because that is seen largely factored in. And in fact, we have initiated a buy call on PNB, Canara Bank, Bank of Baroda and SBI on a selective basis amongst these 4 PSU banks. But I won't be playing on the theme of this IDBI bank, where government is thinking of selling 10% stake to some fund or private equity, and this seen as a positive move. So maybe there could be some technical factors ahead of expiry, or maybe just a trading bounce which we are seeing in IDBI bank.
Yeah. Okay, fair enough. Mr. Tulsian, of course, this IT rally has just moved from strength to strength. So far, it's been a great week. What would be your top pick? I mean, we've spoken about Hexaware in the past. Any fresh names that come to mind now?
See, maybe because I've said earlier also that we are keeping more positive on the mid-cap IT space, and maybe amongst that Hexaware continues to be our preferred pick. And maybe if I need to add it to, then could be Tata Elxsi and Persistent System, because both are looking good. But I think that what I feel that the rally, what we are seeing in the IT space, is more seen as a sector rotation or place to hide, because when you don't have any kind of things available, naturally people want some hiding place, or maybe as a tactical trade to enter into the IT space, which are seen ruling quite low, and the NASSCOM guidance of 9% is seen to be quite satisfactory, and which has all been confirmed by the larger IT companies that yes, they will be, as of now, will be sticking to that kind of guidance, which is not bad. But I won't be too positive the IT stocks going forward, but on a select basis amongst the mid-cap IT space, we prefer Hexaware, Tata Elxsi and Persistent System.
All right, Mr. Tulsian, thanks a lot for your time today. We'll, of course, chat with you tomorrow. For now, just about 7 minutes left before the 3 p.m. move, if any, today. Ahead of that, we have Yogesh Mehta now joining us from Motilal Oswal. Yogesh, good afternoon. So, it's been a bad series for the bulls, this one. Your thoughts on how the indicators are looking for the March series?
Yeah, it has been a very bad expiry for us, and the market is down by almost more than 675 points on a series basis after a long time. But not to forget that markets are still reluctant to go down below the previous swing low of this week to 10,276, and 200-day moving average is also likely to be near to 10,080 and 10,100 levels. So far we are not breaching those levels. We are very much intact towards downside risk is limited. And here on the buy side, there are a few stocks which can be looked at for the swing kind of pullback and type of a short-term horizon on 1 or 2 days prior to that, 1 or 2 days time frame. And there we are recommending Hindustan Unilever to go short, because 1830.32 was a strong support for Hindustan Unilever, which 13,030.32 was a strong support for the lever, and it has broken that. Currently it is 1314. We are recommending to go short, keeping a target of 1290-95 range, and keeping a stop loss of 1332. The another one which we are recommending is a strong support of Coal India, which is reluctant to go down in this kind of in this big market, the whole market 4 days, and keeping 306 as a stop loss, one can initiate buy, and the target can be near to the range of 318 to 320. The other one which we are recommending is Vedanta. 321 is a swing low for today, and still holding on to the support. Any break or the breach above 328 level in the spot can initiate future buy, and the stop loss could be at around 322, and target could be in the range of 335 to 337 levels.